Assalamualaikum and hi. Now I will explain chapter 1 under topic goals and governance of the firm, which focus more on subtopic corporate investment and financing decisions. Chapter learning outcomes. At the end of this chapter, students should be able to understand the basic concept of corporate investment and role of financial manager. Besides that, students also should be able to identify the importance of goals for corporation and corporate governance. Chapter outline. There are 4 subtopics that we'll cover in this chapter. The first one is corporate investment and financing decisions. The second one is the role of the financial manager and the opportunity cost of capital. Third is goals of the corporation. And the last one is agency problem and corporate governance. In this video, I will explain subtopic number 1, which is corporate investment and financing decisions. As introduction, we will define what is corporate investment. And to define what is corporate investment, there are several important questions that you need to be answered first before you can directly define what is corporate investment. Some important questions that you are answered using finance to define corporate investment. The first question is what long-term investment should the firm take on? And then what line of business will the firm be in and what sort of building, machinery and equipment will the firm need? So to define what is corporate finance, at first you should know what is the long-term investment that the firm should take on. What is a long-term investment? Long-term investment means that what is type of investment that company or firm take on with a period more than 1 year. So because the period or the maturity period or the useful life of the investment is more than 1 year, so that is considered as a long-term investment. And then based on the second question, what line of business will the firm be in and what sort of building, machinery and equipment will the firm need? So at first, besides we identify in terms of the long-term investment that the company take on, we also need to know what is the business line of the company. Are the company is in manufacturing business? Are the company in servicing? Are the company in the financing? Are the company in the transportation? So we should know and identify the line of business that the company do. Are they producing in terms of manufacturing the products or are they provide in terms of the service? And then beside that also, you should know what is the types of asset that the company need. Are they should focusing more on investing in fixed assets such as building, machinery, or the equipment? So that is the first question that you should know to define what is the corporate investment in terms of their what types of long-term investment. Next is what line of the business be, and then what types of in terms of their fixed asset involved by the company. And then to continue answering what is the corporate investment, based on the second question, where will we get the long-term financing to pay for the investment? And then will the firm bring in other owner or will the firm borrow the money? So because at the beginning we identify what types of long-term investment that the company should take on. So that's why under the second question, we should know what types of financing that the company involved to finance in terms of their long-term investment. So are they getting the money or capital by doing equity financing or by doing debt financing? Are they investing in terms of their stock? Are they borrowing money from financial institution by doing a debt financing? Okay, so next, will the firm bring in other owner or the firm borrow the money? In question number 2, so it's more focusing on what types of financing that are available for the company. Are they equity financing or are they involved in debt financing? And the last question or the third question, to define what is corporate investment, you should know how to answer in terms of how will we manage the everyday financial activity of the firm. So we want to know in terms of how the managing in terms of the current asset and also current liability to finance in terms of their daily operation. So if the company producing in terms of the manufacturing, so how the company manage in terms of their current asset and the current liability. Are the company have enough current asset to pay for their current liability or not? Okay, so that is the three important questions to answer what is the corporate investment. So in the conclusion, to define what is a corporate investment, it's more on what types of the long-term investment involved, what types of the fixed asset that the company have, and then how the company get the financing to purchase for the fixed asset, to invest in a long-term investment. So they get financing from debt financing or the equity financing. And the last one, corporate investment also involved with the way on how company managing in terms of their daily operation based on their everyday financial activity by focusing on their liquidity position based on current assets and also current liability, or we call it as managing or utilizing in terms of the company net working capital. Okay, so next we move to the financial management decision. So it is important to know regarding the financial management decisions. What are the decisions involved by the company to make sure that they can get efficiently in terms of managing their corporate investment activity. So there are three financial management decision. The first decision is under capital budgeting. So what is capital budgeting? So capital budgeting is a decision regarding what long-term investment or project should the business take on, and then identify investment opportunities that worth more to the firm than they cost to acquire. So in capital budgeting it is a decision regarding type of long-term investment that the company should involve, and then how company manage in terms of their investment activity by focusing in terms of cost to acquire. The cost to acquire the investment or the project is too high or too low, or the cost is effective or not. So that is more on capital budgeting decision, which is the first decision under financial management decision. Second decision is regarding capital structure. Under capital structure, it is a decision on how company should pay for the asset. The company pay for their asset, which is fixed asset, by doing debt financing or equity financing. Or in simple word, capital structure is a decision regarding sources of financing that the company take on. Are the company involved with equity financing or are the company involved with a debt financing? So it is useful for the company to have a combination of the financing, which is a combination of debt financing and also equity financing. So what is a difference between debt financing and also equity financing? Debt financing means that company get their financing, their sources of capital by issuing debt. So there are two ways on how company can issue debt. The first way issuing debt is by borrowing money from the financial institution, and the second way on how company can do in terms of debt financing is by selling bond to the bondholder. So when company selling bond to the bondholder, so means that company will borrow money from the bondholder. That is under debt financing. And then equity financing refer more on company getting the money or financing by selling shares to the shareholder under initial public offering or subsequent equity offering, which means that selling the share or equity under the security market in Bursa Malaysia or in financial market. Okay, so that is under second decision, under financial management decision, which is under capital structure. And the last decision is under working capital management. So under working capital management, that is a decisions on how do we manage the day-to-day finance of the firm. So under working capital management, it's more on decisions on how company can finance or can utilize or can manage in terms of their daily operation. So how the company manage in terms of their cash, how company manage in terms of their inventory, and then how the company manage in terms of their short-term liabilities. So that is under working capital management, which is a decision regarding the daily operations of the company. So that is the three important decision under financial management. And then based on the three financial management decision also, it will answer the three question to define what is the corporate investment. So in summary, to make all of you clear what is the financial management decision. So I'm summarized that the capital budgeting is a decision regarding types of long-term investment that the company should involve, and then capital structure is a decision regarding the sources of financing that the company should involve, either equity financing or debt financing. And the last decision is under working capital management, that is a decision regarding on how company can manage in terms of their daily operations. Okay, so that's all for topic number 1 regarding corporate investment and also financial management decision. Thank you.